In this lecture, we will be discussing Chapter 9 in your reimbursement textbook, Revenue Cycle Management. In this chapter, we will learn to identify the basic steps of the revenue cycle for acute care facilities. We will learn the relationship between the revenue cycle and the positive impact that can have on hospital finance. We'll identify how the revenue cycle ties into hospital compliance. We'll understand the HIM professional's role in the revenue cycle, define revenue cycle management, and discuss the old versus new approach, and verbalize the importance of an effective revenue cycle. We are going to just define a couple terms before we get into the meat of the lecture. The revenue cycle is defined as regular income, and the cycle is regularly repeating set of events that produce it. Revenue cycle management, or RCM, is all administrative and clinical function that contribute to the capture, management, and collection of patient service revenue. The manager of the revenue cycle management may be termed different titles in each facility. They may call this person by the different titles listed on this slide or something totally different than what's here. These are just some sample job titles that you may see. But the ideal candidate of managing the revenue cycle is someone that has knowledge of the registration process, of the coding piece. They have finance experience, clinical knowledge, operating skills, and of course leadership abilities. In the past, revenue cycle management went by a silo approach where each department was responsible for their own functions and contributions to the revenue cycle. However, this approach was often reactive in nature rather than promoting communication between the departments. It tended to foster hostility and division. The 21st century approach to revenue cycle management in healthcare facilities is based on a multidisciplinary model. This dynamic management style does promote cooperation among the various departments by creating a team that is made up of representatives from all revenue cycle areas. An emphasis on education encourages all team members to be updated on all the changes that happen in healthcare, such as payer trends, government modifications, and organization strategy. As a result, each member of the team has a better understanding of other members' importance to the revenue cycle. The old revenue cycle management approach was reactive, so reacting to problems after they occurred. The new is to be proactive and try and prevent problems from happening. Each section of the revenue cycle is vital to efficient and compliant reimbursement processes. The basic components of a revenue cycle are similar at each facility, though there is generally varying things that happen at different facilities' practices. But the big difference between revenue cycles at facilities is the size. A facility that is composed of many units, such as registration lab, coding, etc. A physician practice may be one service area and one business office, and the next facility may have many different areas. The major components of a revenue cycle are pre-claim submission, claims processing, accounts receivable, and collections. Pre-claim activities, those are tasks and functions from the admitting and case management areas. Specifically, this portion of the revenue cycle is responsible for collecting the patient's and the responsible party's information completely and accurately for determining the appropriate financial class, educating the patient on their financial responsibility for the services that are rendered, collecting waivers when that's appropriate, and verifying data prior to the procedures being performed and submitted for payment. As part of the pre-claim operations, the registration or admitting clerk will collect patient demographic and insurance billing data. They will verify insurance coverage. Was the insurance canceled? Or maybe the patient is no longer covered for the data service? Was a pre-authorization required and received? If there was an accident, that would be gathering the information on where the accident occurred and if anyone else's insurance is responsible, for example, if it was an auto accident. Patients may also need to be educated on the terms listed on this slide. A copayment is the amount determined for each service that a patient must pay to the healthcare provider as determined by their insurance policy. The deductible is the annual out-of-pocket expense incurred that the insured must pay each year before the insurance company will pay benefits. ABN, or Advanced Beneficiary Notice, this advises the beneficiaries before services are provided when Medicare is likely to deny payment for those services. This allows those beneficiaries to make an informed decision about whether they really want to have the service or not, because that means they will more than likely have to pay for that service out of pocket. Claims processing activities include the capture of all billable services, claim generation, and claim corrections. Charge capture is a vital component of the revenue cycle. We have electronic and paper-based order entry. We may have charge tickets or encounter forms. And our coding comes into play as well. Hard-coded data or hard-coded charges, those are charges that are automatically generated from the Charge Description Master, or CDM. And we're going to be talking about that in just a moment. Soft-coded is records that are coded by HIM professionals or coders in the HIM department. As I mentioned, coding is a major portion of charge capture. Claim submissions require ICD-9 or HCPCS codes to be reported on the patient's claim. Several types of visits, such as clinical visits, lab, and x-ray, are designed to have procedure codes posted to the claim via the Charge Description Master. During order entry, electronic or paper-based, either way, a unique identifier for each service is entered, and then that unique identifier triggers a charge from the CDM to be posted to that patient's account. This process, as I said, is known as hard coding. It is not entered or prompted by a coding professional. Different facilities do use different terminology for a charge description master. These are the synonyms for a CDM listed on this page. So what is A charge description master? It's a translation table that puts the appropriate codes on the claim form and categorizes services and supplies for accounting purposes. Various supplies and services that are listed for average facilities then drives reimbursement for the majority of UB04 claims for outpatient services. Or more simply put, the charge master is a list of supplies and services with corresponding charges for those items. Usually they are grouped together by a department and updated and maintained by that same department. Great. This is a great opportunity for an HIM professional to show their coding and management expertise to be involved on the charge master committee. There is a sample of a charge master, just a small piece of it because they are very, very, very large. Just a sample is listed in your textbook in Chapter 9. The components of a charge master include the charge code, the description, the department number, the revenue code, an insurance mapping code, what the charge is, if it's active or inactive, that particular line item, and if there is a modifier. Here's just a sample snapshot of what a charge master would look like. And as I said, they're very, very, very large electronic documents, thousands of line items. So this is just a small sample. And if you remember, the charge master does not include ICD-9 codes. It is a HCPCS coding driven document. Revenue codes, that's the 4-digit number used for Medicare for billing purposes. Typically, it's a 3-digit code. It tracks Medicare costs by revenue centers. You need to be familiar with frequently used revenue codes. A sample of the revenue codes are listed on the middle of the slide. Medicare requires the assignment of the most specific revenue code possible. OCE edits are included for proper revenue code placement and usage. Failure to effectively maintain the charge master puts a facility at risk for compliance violations and lost reimbursement. Generally, the charge master coordinator is someone who would help and maintain the charge master. They should have coding and claims processing knowledge. If an item is desired to be added or changed, a request is made, the committee reviews that request. A qualified coder reviews possible code choices. They confirm with the FDA approval if it is a new device or new technology. Review pass-through status if it is a device. And then if that request is approved, they notify all, generally department heads, of the change. To maintain the charge master, it's critical to keep up with federal requirements. It's important to read the Federal Register, the CMS or Medicare memorandums, your insurance bulletins, and LCDs. Keep documentation for all the changes that are made, maybe in electronic format, updated quarterly for the APC system, so those changes will be happening on a fairly routine basis, but it's important to keep documentation on why the changes are made and what process they went through to become a finalized change in your charge description master. Without a charge master, the facility would not receive proper reimbursement. So among the negative impacts that may result from an inaccurate charge master, We may be receiving overpayment, underpayment. Our claims may be rejected. If if things are coming back incorrect or invalid, we may be looking at fines and penalties as well. So now we're going to move to actually processing the claim form. The paper form is the CMS 1500. That's for physician billing. Electronic is the 837P. The paper form for facility billing can either be the 1450 or the UB04. If it's electronic, that is called the 837I. Before a claim goes out the door of the facility, it will be put through a scrubber and a hand audit. And that is again done internally. The purpose of that is to try and catch the claim before it goes out the door, and that will delay the entire process if there is an error and it is not caught until it gets to the insurance company. If an error is found in that scrubber, the corrections are made, and hopefully every claim that goes out of the facility's door is what we call a clean claim. The HIPAA transaction rule is the final rule on standards for electronic transactions and code sets. It identified 8 electronic transactions and 6 code sets. There is a table in your textbook that does list all of those 8 transactions and also one that lists the 6 code sets. This rule ensures all providers, third-party payers, claims clearinghouses all use the same set of codes to communicate coded health information, therefore ensuring standardization for systems and applications across all of the healthcare continuum. Not only does this support standardization, but it also supports administrative simplification. The Accounts Receivable Department manages the amount owed to the facility by customers who have received services but whose payments will be made at a later date by the patient or the third-party payer or their insurance company. Once the claim is submitted to the insurance company for reimbursement, the account receivable clock begins to tick. Typically, performance statistics maintained by the Accounts Receivable Department include days in AR or accounts receivable and also aging of accounts. How we determine days in AR: we divide the ending accounts receivable balance for the period we are looking at and divide that by the average revenue per day. Aging of accounts is maintained in 30-day increments, 0 to 30 days, 31 to 60, and so on. Facilities monitor the number of accounts and the total dollar value within each of these increments. The older the account or the longer the account remains unpaid, the less chance the facility is going to receive reimbursement for that encounter. Once a claim is received by the third-party payer, the insurance processing of the claim begins. Medicare claims for Part A services and hospital-based Part B are submitted to a designated MAC or Medicare Administrative Contractor. They then determine what charge is allowed by Medicare. They make payments to physicians and suppliers for Part B services. They conduct reviews and audits and make payments. The Medicare Code Editor or Outpatient Code Editor is an editing system used by the MACs to verify that your claim is submitted correctly. Some of the things they check for are correct provider information, And they look at your codes, ICD-9 and HCPCS. Should something have been bundled or was it mutually exclusive? They look at dates of service and physician information. In addition to processing the claim for payment, insurance companies also prepare an EOB or explanation of benefits. This is delivered to the patient. The EOB is a statement that describes the services rendered, what payment was covered, was there any benefit limits or denials. For Medicare patients, the contractors prepare Medicare Summary Notices, or MSNs. These detail the amount billed by the provider, what's covered by Medicare, what the patient must pay. MSNs, EOBs, they are basically the same thing. It's just MSNs go to Medicare patients and EOBs go to basically everybody else on insurance. So once a claim is processed by the insurance company, a remittance advice or an RA is electronically returned to the provider. And that is basically the same thing as what the patient gets, which we call an EOB. And it says who the patient was, what's the date of service, what was billed, what did we pay, why did we not pay, those kinds of things. So basically, those are all the same thing. The EOB, MSN, and RA. It really just depends who is getting this information, because essentially they contain the same information. So the RA goes to the facility or the provider. MSNs go to Medicare patients, and EOBs go to patients with insurance coverage. The last component of the revenue cycle is reconciliation and collections. The healthcare facility uses the EOB, MSN, and RA to reconcile their accounts. They identify the money that is owed by the patient. Collections can contact the patient to try and collect any outstanding deductibles and co-payments. RAs indicate rejected and denied line items or claims. Facilities can review these to determine if the claim error can be corrected and resubmitted for any additional payment. The purpose of the revenue cycle management team is to improve the efficiency and effectiveness of the revenue cycle. Each team will be developing different goals and objectives to help guide their focus and discussion. Each facility will have different team members based on how their organization is constructed and managed. Why do we want to improve our revenue cycle? Well, decreased payments mean lost revenue. For all of the reasons listed here, poor coding, poor documentation, all of that does mean lost money. Healthcare facilities, hospitals are businesses. They need money in order to keep their doors open. We also want to improve patient satisfaction. And each year, the healthcare industry spends about $26 billion on their revenue cycle operations. At most facilities, you will see the revenue cycle team made up of at least one individual from each of these departments. Someone in admitting, from case management, from coding, from finance, from IT. And like I said, there should be a representative from each area on the team. The first step of the team should be to assess the knowledge level of all the members. To look at if any initial education is required. They will then define what their goals and objectives are, identify any data needs, and that's partly why that IT professional is brought to the table. Standard language and format for data reporting is established, as well as also some key measurements. The team's objectives for most facilities are generally at least include what is listed on this slide. What are some ways to improve accounts receivable? How can we communicate issues with the appropriate departments? What education material is needed to create a map or blueprint for new services? To review denials and discuss the appeal processes? And also to coordinate upgrades to all the systems. These are some sample revenue cycle measurements. There is a fairly lengthy revenue cycle management case study at the very end of Chapter 9. I would encourage you to read through that. It goes through different edits and what can happen in some of those instances. So please take some time and review that at the end of Chapter 9.